David Morgan with you at the Vancouver Resource Investment Conference, January 2018. Paul Gill, Lomiko Mining. Well, we've known each other for a while, and the story keeps increasing. And so I think for new viewers, we should outline, outline Lomiko Mining, but also go into the restructuring that you accomplished last year.
Yes, thanks, David. What Lomiko has always been focused on is the green economy. And we feel that there is a number of different minerals that are going to be used in that green economy. And we've always thought about lithium, graphite, cobalt, rare earths as the opportunities. And so what we've done is we've explored primarily graphite, because that's the market yet to come in this sector. And we've had very good success in the La Lutz property in Quebec. And we've been drilling for about 3 years now. Have a resource of 3.5% over 36 million tons. But that's not good enough to get us to the top 5 position in this sector. So we've continued our exploration and found another zone called the refractory zone. So we're very excited about that zone. We're going to be drilling that and putting that into the resource. And some of the intersections there in graphite are in the 14-15% range, which is fantastic and right at surface. So the economics of the project are going to be really robust, which is what you look for in mining. Of course, close to surface, easy transportation and infrastructure. So we're really excited about the next few years and the market as well.
All right. So coming back, it's been kind of a tough haul for most of us in the industry over the last few years, and you decided to do some restructuring last year, correct?
Yeah, in 2016, we had about 186 million shares out. We were trading below 5 cents. We got a one-ditch effort from the TSX venture. It allowed us to do a 4-cent financing, but that's it. After that, we just couldn't continue to do financings at 5 or 6 cents. We wanted to do a lot more. And we had to do a lot more to service all of the activities that we were doing. And so we decided to restructure 10 for 1. We did that, came out of the situation with 18 million shares out, then promptly raised $2.5 million at an average price of about 17 cents. And so now we're very well structured and with about 35 million shares out, but ready to drill. And we've made some new technology investments as well.
Great. Well, let's talk about that. What do you're a green company, you've been looking at the technology. We'll get to graphene in a moment, but what technologies have you been looking at?
Well, what we always look at is where is graphite going to be used? Where's the potential use for this material? It's a great thermally conductive material, just like what you mentioned, graphene. But this particular use that we found, or several uses, were very interesting. One specifically is in our investment in smart home devices. SHD Devices is the company, and the reason they needed it is that they needed to make sure that there was heat management when we installed this particular product, which is a receptacle that goes into the wall, essentially putting your whole power bar into the wall. Well, that creates a lot of heat and energy, so you need to have some way to retain heat and not have it come out and become a fire hazard. So that's a great use. And so if we look at the market for smart home devices, I mean, talk about 1.3 million homes, and each of those homes will have, I think, about 10 on average smart devices. Well, they need to be charged. They need to have wireless connections. So that's the market we're going into, to have this particular spider charger device as the first level, but then build upon it to really service that market. And graphite has a place there. And so we really want to lean towards where the material is going to be used. The other product within smart home devices is a power converter for LED lights. So we're getting a lot of requests to help people transition from fluorescent lights to LED lights. So the power converter that's used is a little bit different than the normal ballast. It goes into the ballast. So that's another application for graphite to suck some of the heat generated out. And generally speaking, we're getting more efficient as a society, and it's good. We have to be concerned about power management as a society. We have a lot of phantom power loss that goes on, and that's where smart home devices is really focused, is power and energy management and heat management.
We did a brief study on the LED on the silver side. It was pretty interesting. There's quite an energy savings. So now with the money that you raised, with the Treasury looking pretty robust and the shareholders probably happy with the rollback, what are your plans going for this year, 2018?
Well, if shareholders held, and then the long-term guys, they're usually wanting to know what's next and where are we going to go from here. Well, there's a lot of structuring that goes in. So I've asked them to continue to support us, and I ask shareholders all the time to say, tell me what you feel, and then I could tell you I feel 10 times worse about doing these things. But you know what? We have to survive as a company, and our long-term goal is to build $1 billion asset in Quebec, and that is going to create value. And you can't. It's like a football game. Sometimes you play defense, but then when you get a chance to play offense, you go for the end zone, and that's where we're at now. But you can only do that if you get the ball back. And as a CEO, I need the ball. I need the funds to put into the ground and create value, and that's what I've done. And I think that we've had a lot of interest now and a lot of momentum. Graphite itself is the electric vehicle market, and graphite is turning very, very interesting right now.
There's a lot of talk about EVs. Why don't we look at it from Lomiko's perspective? How does Lomiko see the EV market continuing?
Yeah, well, definitely there's a lot of electric vehicles on the market right now, and a lot of people are going electric. There's a lot of infrastructure that has to be built to support that. So not only is the lithium and graphite going to be and cobalt going to be used in the batteries itself, but they're also going to be used in the supercapacitors that are needed to charge these batteries as they go into the charging stations. So we see a lot of use. Now Tesla also implemented the wall as well, so that you can have that charging capability at home. So I think that's another use. And then there's a numerous amounts of electronic devices that are being created every day. So not only is there the electric vehicles that are going to slowly increase to about a suggested 25% to 30% penetration by 2025, which means quite a few million vehicles on the road. But then the next other side of it is, well, where are all those lithium-ion batteries going to be serviced? They're going to have to be used. You can recycle lithium, it's worth it. You can't necessarily, and you don't want to recycle graphite. So you're going to use graphite up, you're going to go and mine more, and the market for graphite, I think, has really tightened up. So we've seen China reduce exports by 30,000 tons. They only exported 90,000 tons in 2016. So if to have 1/3 reduction means that they're consuming it internally for their own battery companies because you get a huge markup on the lithium-ion battery. Why export the graphite? Yeah. And then of course the steel makers in India are crying bloody murder about the fact that they can't get graphite electrodes for making steel, because that's another market. So we see we're trying to read into the tea leaves as much as we can, but I think we see a real bump in the price coming. Well, I think we've seen a 30% rise from about 1,000 to 1,300 for certain levels of 94% purity graphite. But it's a complex market. So what our real purpose is to understand that there's a number of uses for graphite. It's a bigger market than lithium by 10 times, and not only that, natural flake graphite is supplanting synthetic graphite for a number of uses, and synthetic graphite's made out of burning oil. So obviously there's another big market there to eat into. So I think that's the real interesting part about graphite. Once it gets going and once the uses and demand increase, we're going to have to find that supply. And supply is limited right now.
So if you continue on your mission and find a greater resource, what would be your exit strategy? Would there be like a huge conglomerate that probably want to take you out, or?
Yeah, well, we're lucky enough that our consulting geologist on the project is Jean-Sébastien Lavalier, who is also the chairman of Critical Elements, a company in Quebec that's has a PEA on a lithium tantalum project. So we feel that we've got a good connection there, and they've had negotiations going on with other people about offtake agreements and et cetera. That's the start of that. But once you have the PEA design, you don't want to come out and say, here's the PEA and it's half baked.
Right.
You want to make sure it's that top 5.
Yeah.
And that's what I'm going for, is a top 5 project worldwide, so that we have infrastructure, we have very high grades, and we have very high purity and flake graphite content. So that's something that our contacts will want to take to Asia and get offtake agreements and possibly development agreements. So that's our strategy and approach. I think it's the right one. It's a long-term one, but it's the right one to produce maximum value.
Sure. Well, you don't want to, as you said, the preliminary economic assessment, unless you've got as much top-level product as possible.
Exactly. And we've explored only 2 zones on that property. And I think this second zone, the refractory zone, is going to be the one that's going to deliver those numbers that we want. So there's 10 more zones to drill. In the eventuality of a mine being created, we can continue to develop a long-term profitability situation as we develop each of the zones and build them out. But the idea is to keep the pits small, near surface, and then move and remediate one and then move to the next. That's the best strategy, so that you don't have a huge open pit or a huge environmental problem. I think that fits with our philosophy and with the maximization of return on investment, because you're getting your best product out and you know where it is on the property.
Institutional following, you picked up any more? Or?
There's limited institutional following. This is really a retail story at this point in time. We want institutions to take the risk later on.
Sure.
We want retail guys to be in the market now, where we think there's going to be that 5 or 10 times return. And at that point, like the stages of lithium companies,
Sure.
When they get to that point, then we get the institutions involved who can take the risk and mitigate it themselves. So I think we're at that stage now where we're still going to get to that PEA. It's going to be a turn from a retail story into an institutional story at that point.
From a bigger perspective, Paul, we kind of get the flavor of the month, I call it, where, graphite was, kind of at the top one looked at, and then it became lithium, and now we're like in the cobalt, and there's even a little discussion around vanadium. And it seems to be, flavor du jour. But as you said, your market is like 10 times the amount that lithium is. Do you think that story is something that most investors know? You think it's a story that still needs to be known?
I think on the investor and speculation side, there's not much speculation that's happened in graphite. There's real stories that have been out there. There's Mason Graphites at $250 right now, so people understand that particular company. It's got a lot of support from Quebec and a lot of institutional support, even from JP Morgan or groups like that. But no, not a lot of people understand, because they're waiting for that underlying graphite price to move. And when the underlying, just like copper or silver or anything, when that underlying commodity moves, all of a sudden you have people in institutions coming to look at the company. So we've been solid in our continuation of that particular side of things. But at the same time, we do have a lot of other tech companies that we invest in as well. So we've as I said, the smart home devices, and now the latest and greatest is the cryptocurrency market. So we had a dabble into the cryptocurrency market simply because we couldn't turn it down. We had a chance to, as a company, buy 25% of a cryptocurrency mining conglomerate and support them to design their own machines and create their own IP around coins and tokens and et cetera. So it's an exciting little company, but it's something that we can create value for for our shareholders in Lomiko as we're building that long-term graphite story out.
Great. I think we've covered everything. Is there anything that we haven't talked about that our viewers should know about Lomiko?
Well, I think what we've seen is a big correction in December of 2017 with tax loss selling, but now we've really doubled since that middle of December period, and we're continuing to work on the markets, and the volumes are really good right now. And I think that is indicative of the shift from lithium juniors as speculative plays to graphite juniors as speculative plays. And I think that's very vital. I mean, we have to know when the tide is right for us. So as we launch our ship, we're going the right way. And I think it's time now.
Good. Well, I think you're right. I think 2018 for the whole commodity sector is actually going to be good. Very few people know that the ETF for base metal miners actually hit a 4-year high a few months ago. So that's sort of a peek under the rug, so to speak, as a metaphor that there are signals that are out there that, if you know where to look for them, are nodding that, yeah, there's the commodity super cycle is probably coming back to us. And obviously you're in a niche market that's very underknown and underappreciated. So I think if you're a savvy investor, it's a place to look. So really appreciate you coming back and having an interview with me. It's a fascinating story. It reminds me of the silver market when I started. Very few people knew much about it at all, and it kind of overlooked, but it was a big opportunity at the time. So thanks
very
so
much, Dave. Nice to be here.